Aldo Delgadillo, and I'm from Managed Career Solutions. And within our agency, we do have two WIPA programs, and we're divided in South and North. So we have different areas. My catchment area serves a portion of Los Angeles County, Santa Barbara County, and Ventura County. So those are my huge catchment areas. I'm going to talk to you today about Social Security Administration and their work incentives. And I want you to learn a little bit about WIPA, who we are. I also want you to understand who Social Security Administration is and the type of programs that they administer. But we're going to really focus on understanding Social Security disability insurance as well as the supplemental security income. And hopefully by the end of these presentations, you understand more about the work incentives. So how can WIPA help? WIPA does have staff named Community Work Incentives Coordinators, also known as CWICs, and we are here to counsel people on the effects that work may have on benefits, and mostly SSI and SSDI. And we are here to help you understand what work incentives so that you can make an informed choice, or your clients can make an informed choice of how they want to proceed and move on with work. And we are also here to connect folks to those employment support agencies, such as Department of Rehabilitation or employment networks that would help people either get training or get them back to work. And what a person should expect when they contact WIPA. There are different ways of connecting with WIPA. So one way could be through the Ticket to Work helpline. Individuals would call the toll-free number and get connected to the appropriate WIPA in their area. Or the person can connect with us directly by calling us, or the person get connected through another agency. So we have, for example, I work closely with the Tri-Counties Regional Center. I have a lot of their clients get referred to us. Department of Rehabilitation is another agency that will refer folks to us. And so the person, in order to obtain our services, they do have to be either working, thinking about working, they had a job interview or have a job offer pending, or they have a job interview scheduled coming up. They could be a veteran. It could also be a person between the age of 14 and 25 who's not working or not thinking about working yet, but wants to have some information for future reference. And then usually what happens is after you connect with us, you should expect for a CWIC to give you a call within 1 to 5 business days. And then from that point on, the CWIC would do what we call an information and referral. So we'll collect some information from you and kind of give you some brief advice. If the person is really looking to understanding their particular situation, we like to call that an individual service. So there's more steps that we need to take in order for that to occur. And one of them is to verify benefits. So in order for us to do a report of how those benefits are going to be impacted. And we provide that information to the individual and review it with them after one is completed. So who WIPA is? WIPA was created in 1999 as part of the Ticket to Work program and the Work Incentives Improvement Act. And so then it was assigned and put into law to increase options for people with disabilities who are receiving SSI and SSDI and are thinking or were thinking about going to work. And as a result, Social Security awarded agencies to provide benefits counseling to those individuals who needed the assistance. And work incentives, as I stated before, it's a free service. We do provide benefits counseling to provide people with informed choice and how they want to move forward with employment. And this program is for all individuals, as I stated before, who are employed, self-employed, or individuals seeking employment or self-employment. So what is Social Security Administration? Social Security Administration is actually a building. and it's an independent agency of the U.S. federal government that administrates different type of programs, such as Social Security Disability Insurance, known as SSDI, Supplemental Security Income, known as SSI, retirement, childhood disability benefits, also known as adult disabled child, and survivor's benefit, also known as widow's benefits. Just a quick side note, I'm not sure, sometimes you might get a person that tells you that they're receiving SSA. And it's because when Social Security sends out the payment, it will show up as SSA. And most of the time, it's actually SSDI, the Social Security Disability Insurance. So the difference between these two programs are, one, SSDI is really based on earnings and disability. So what the person's going to receive, it's based on how much that person paid into the system, how much they contribute and how much their employer contribute. It's also going to be based on disability. So whether or not the person actually has a disability, that's determined by Social Security. There's no income limits or resource limits. So anyone can receive the SSDI. The person must have enough credits in order to qualify for SSDI. And the benefits types are based on disability, and that includes visually impaired or blindness. It provides benefits to eligible family members. So for example, any children under the age of 18, or maybe an adult child with a disability, this is where the childhood disability benefit can come in. Also with SSDI, you will receive Medicare after 24 months of entitlement for SSDI. And there are some exceptions. So for example, if the person has an immune disorder, cancer, kidney failure, the person may receive Medicare before those 24-month waiting period. And it doesn't matter who you live with or who lives with you, their income does not impact the income of SSDI. Now, whereas SSI works a little bit different. SSI, kind of think about it as a welfare program, and it's really based on the need. It's financed by taxes. There are limits in income and resources. So a single person may not have more than $2,000 in income or resources. And if it's a couple who are both receiving SSI, they may not have more than $3,000. Or it can be a person who's married to somebody who's not an SSI, and they may not both have $3,000 in income or resources. There's no work credits that are required for this program. And the benefit is based on whether the person is aged, so over the age of 65, is disabled. It can be at any age. Blindness would be another way to qualify. Under the SSI program, another person or family member may not receive SSI. Under SSI, you also could become eligible for Medi-Cal automatically. And in SSI, who you live with or who lives with you may impact the amount that you received in SSI, because there is a cap on how much you can receive on SSI. So I'm going to talk to you about the work incentives for supplemental security income. I will stop and ask questions after I discuss SSI, and then if anybody else, if anybody has any questions, we can answer them at that time before I go on to SSDI. So supplemental security income, the state of California has arranged with Social Security Administration to combine both the state supplement payment, also known as SSP, with Social Security Administration. So the federal amount for this year that an individual with a disability or a person who's aged or visually impaired is $943. In California, the SSP is $239.94. So the total cap amount that a person in California may receive is 1,182.94. Now, if the person is blind and is considered blind, they would get $324.32 in addition to the $943 of the federal rate. So the total max amount that a person who's visually impaired can receive is $1,267.32. Now in California, there are other rates that the person may receive depending on where they live, if there's a kitchen or there's not a kitchen. And those rates you can find in a fact sheet. It's SSA form EN-50-1125. So how does work affect SSI? So Social Security Administration does not count all of the money that the person receives. There are some exclusions. I'm not going to talk too much about transition exclusions today because that's a different calculation. But I'm just going to talk to you about an adult who's over the age of 22, not attending school, and how their income would look like. So Social Security would not count $20. That's just a general exclusion that Social Security does. They wouldn't count $65 because the person is working, so that's an earned income exclusion. And then they wouldn't count half of the money that the person will receive. And I'm going to give you a couple of examples of what that would look like. Okay, so here's a straight calculation of a person earning $5,000 in a month working in a state job. And so this person is only receiving SSI, and their earnings is $5,000 a month. So as I stated before, Social Security does not count $20, which brings it down to 4,980. They don't count 65, which brings it down to 4,915. And then they don't count half of that money. So the only thing that Social Security is looking at to determine whether or not you're going to receive an SSI benefit check is $2,457.50. So as you can see under where it says base SSI rate, we have $1,182.94. We reduce that by $2,457.50. So that brings us to a negative number. And so SSI in this case would not give you a benefit for that month that you meet that $5,000. Now, if a person zeroes out for 12 consecutive months and is earning over 58,800 and something this year, you would not receive a benefit anymore, and the benefit would be terminated. There is something called Medi-Cal 1619B, where if the person zeroes out for 12 consecutive months, but the person is earning under 58,800 and something, Social Security would keep you under the eligibility due to that Medi-Cal protection of 1619B. However, there are situations where that might change, and then the benefit would be terminated, and the person would get a letter stating that. Okay, here's another example, and this is of a person who has a work goal of working part-time as a community worker, and their earning goal is to earn $23.57 an hour for a total of $2,041.16. So again, we're doing that $20 exclusion. We're doing that $65 exclusion, and then we're not counting half of the money. So what would be taken into account would be $978.08. So in this case, the base rate again is $1,182.94. Social Security would reduce it by $978.08 before deciding what the new amount is. In this case, this person will still receive an SSI check of $204.86. We take into account their gross earnings of $2,041.60. So this person is bringing home $2,246.02 as a total finances in a month. Okay. Here's another example. In this example, I know I haven't talked about SSDI, but I will talk about that next, and you'll see why it would make sense. So there are individuals who might be receiving two benefits. In some cases, either they don't have enough money or enough benefit to bring them up to the cap of what SSI would give them. And so they might have a reduced SSI benefit, and they might have a smaller check in SSDI. So in this scenario, I have a person who's receiving $797 from SSDI. This person is working 32 hours a week at $17 an hour, earning $2,355.52 in a month. And so we're going to do the general exclusion at the top where they're receiving that SSDI. That's where we do that general exclusion of $20. So as you can see, the person is only receiving, or excuse me, Social Security is only taking into consideration $777. We're going to put that math aside, and then we're going to do the gross earned income. So in the gross earned income, we're looking at $2,355.52. Because we already used the general exclusions up in the top, we're not going to do the exclusion here. You can only use it once. And then we're doing the earned income exclusion of $65. And then we're not counting half. So this person would still be counted as earning $1,145.26. We add that along with the SSDI, and their total amount is $1,922.26. So this person is over with combined SSDI and earnings. Their combined amount brings them up to 1922. So they would be over by $739.32. So in this scenario, SSI would not give them a benefit, but the person would still be receiving the SSDI and SSI. Now, due to their earnings, essentially their SSDI is going to pause, and I'll explain that later in the SSDI area. So for this person, I did the same calculation, this time not including SSDI because their SSDI would pause. So if we do the $20 exclusion, if we do the $65 exclusion, SSI is still going to count $1,135.26. In this scenario, this person would still receive an SSI check of $47.68 because they're slightly under that $1182.94 max amount. So in this scenario, the person would receive that $47.68 plus their total gross earnings of $2,355.52. So they're still bringing home $2,403.20. Okay, so now I'm going to talk to you about impairment-related work expenses. Social Security Administration has a variety of work incentives for SSI purposes. They have impairment-related work expenses. They have blind work expenses, and they have something called a PASS plan. It's too much information to talk about today, but one of the biggest things we see is impairment-related work expenses. So I'm going to talk to you about a little bit about that. And it's an item or service that enables a person to be able to work or to be able to function during work. The item that the person pays for has to be a service for their disability. The cost does have to be paid out of pocket and not reimbursed by any type of insurance, whether it be Medicare, Medi-Cal, or a private insurance. The cost does have to be reasonable and needs to represent the standard charge for the item or service in the community. And I already stated the item has to be paid out of pocket the month that the person worked. So if the person has been paying for a service for their disability, let's say January through May, but they didn't start working until June or July, they can't go back and request for those items to be taken into consideration. It has to be in the month that that person worked. And I'm going to talk to you a little bit about some of those items. So it can be an attendant care service. It can be drugs or medical services. It can be transportation. That is very difficult to get, especially in an area where there is access, unless access is paid for out of pocket, or where there's public transportation. Expendable medical supplies would be another one, bandages, catheters, incontinence pads, dog guide, and all the expenses that come with the guide dog, medical devices, braces, inhalers, pacemakers, and wheelchairs. So here's an example of a person who is working in customer service for 30 hours a week at $16.78 an hour for a total of $2,179.72. This person has a physical disability and they're paying for acupuncture and chiropractor services every month in order for them to be able to work, be able to stand for long periods of time. It's not covered by Medi-Cal, or it's not covered by any other private insurance. So this person, although they're earning $2,179.72, there is an general exclusion again of $20. There is an exclusion of $65, and also $350 are excluded because those are $350 are coming out of pocket. And then Social Security divides that in half. So the only thing the only amount they're looking at is $872.36. They reduce that by the base rate of $11.82. And in this scenario, the person would still receive an SSI payment of $310.58. So the $310.58 plus the $2,179.72 they get from gross earned income, it's accounted for, and then they reduce their expenses. So the person's still bringing in home $2,140.30. So before I start talking about SSDI, does anybody have any questions about SSI? And I can't look at the chat, so if anybody can help me out, I would appreciate it.
No questions in the chat currently.
Thank you. Okay. So now moving on to Social Security Disability Insurance, SSDI, all the rules that we just talked about, SSI, those go out the window. SSDI works very differently. Now, when we think about SSDI, I'll also want you to think about people who might have childhood disability benefit, because under Social Security rules, the same rules apply to a person who is receiving childhood disability benefit. So it would be considered SSDI. And I've had cases where I have an individual who might have worked in the past or has some credits and is receiving their own SSDI, and then they're also receiving childhood disability benefits. So it's also important to inform the CWIC, because the person might need to get 2 verifications to make sure that the information is accurate in both of those verification forms. So talking to you about some of the work incentives under SSDI. There are several. I've only mentioned a couple of here today, but I'm going to focus mostly on trial work period, on substantial gainful activity, extended period of eligibility. We did talk about impairment-related work expenses, so I'm not going to talk about that again, as there is the same service. And then subsidy and special conditions. And so some of you who are regional center clients and staff, special subsidies and special conditions probably more important for you guys to hear in. So I'll tap on that a little bit. So trial work period is a time where the person can attempt to work. And so they have 9 months to test their ability to work within a 60-month rolling period. Now, Social Security, how they determine whether or not the person initiated a trial work period month is whether or not they went over a threshold amount. And that threshold amount changes every single year. This year, that threshold amount is $1,050. I will give you some examples of what that looks like. Now, substantial gainful activity, we talk about that when the person has finished trial work period months, Okay, so again, I said it was 9 months. After the 9 months, a person goes into something called extended period of eligibility. That's going to run for 36 months, whether or not the person is working. And during that time, Social Security is going to look up substantial gainful activity. Substantial gainful activity, there's a threshold amount, and that threshold amount is 1550. If the person goes over 1550, the benefit pauses. If the person stays under 1550, that benefit continues. But other things are taken into consideration. We talked about IRWs. That's one thing that's taken into consideration. Does a person have IRWs? Is their countable earnings going to be under the threshold amount of SGA? If so, then Social Security would take that into consideration. The other thing that Social Security takes into consideration, it is subsidy and special conditions. So some of you might have clients who have a coach, right? That's when this is taken into consideration. If the person is working and the coach is working half the time, they're earning the earnings of the client. So let's say that the client is earning $2,000 a month, but in coach services, they're paid maybe $600, right? So those $600 are going to be taken into consideration. How it works is that Social Security takes whatever the person is earning, okay, and out of the person's earnings, so the client itself, not what the coach is earning, but what the client earns. So if the client is earning $10 an hour, and the coach comes in for 6 hours, then the coach gets paid it's taken into $60 out of that amount. I hope it's making sense. And if not, we can discuss it further. So a person works, and I should have written this down in the example. So let me take my calculator out. Let's say that the person is working 10 hours a week at $10 an hour. That's $100. But the coach comes in and works 6 hours. So instead of Social Security looking at $100 of what that person is working, they're going to look only at 4 hours. So that can be taken into consideration, and the amount the client is receiving would actually be reduced substantially because the person has a subsidy or special condition. And subsidies and special conditions can also be accommodations. So not only has to be a coach, but other things. Or for example, I had a client once who was hearing impaired. And so they needed somebody else to listen to voicemails and to be able to type them up and provide that for them. So the time it took them to do that, that was taken into consideration. So the person's hours and rate was not all taken into consideration. It was discounted for whatever assistance they were getting from work. Or if they were into a meeting and somebody had to do a ASL, that time was taken into consideration. So for subsidies and special conditions, during the time that the person is under EPE, it's where it's going to be taken into consideration. So let me quickly give you some information of trial work period and kind of the history of trial work period. As you can see, as of 2017, I just put those rates up to 2017. It's been much longer. But in 2017, trial work period amount was $840, and it's gradually increased every year. So the person is allowed to make a little bit more money. Same thing with substantial gainful activity. So here's a scenario. I'm going to provide you with a scenario of a person who used trial work period months in 2020 and in 2022. Beneficiary had a goal in late 2023, I think it was, in late or early, late 2023, of earning $14.93.26. And in this scenario, Social Security determines cessation or may determine cessation in 2 months of grace period. What cessation means is Social Security says, we're going to stop your benefit. So just know we're going to give you an SSDI check, and then we're going to give you 2 months of grace period. So the person may still receive 3 additional SSDI benefits before they completely pause. And I'm saying pause, not terminated, because there's a difference. And I'll explain that in a minute. So in 2021, as you can see, July, of 2021, the person went over the substantial gainful activity for that year. And in 2021, the substantial gainful activity was, let's see here. It was $940. So in July, August, and September, that person went over 940. In December, that person, in October, the person went under 940. And then in November and December, that person went over 940 again. So the person used 5 months, even though they worked 6 months, they used 5 months of trial work period. And then in early 2022, the person used trial work period in January and February because they were over $970. In March and in April, they were under $970, which was the trial work period amount for that year. And then in May and June, they slightly went over. So their trial work period ended in June of 2022. And in this case, per the records, there was no cessation and grace period, but Social Security could have easily said you have cessation and provided 3 more checks in July, August, and September. But this person did start EPE. And so in EPE, in July, the EPE was 1350. So the person was under 1350. Therefore, the person still received an SSDI check. In August, this person was over SGA of 1350, so this person did not receive a check. Again, in September, they were over 1350. They did not receive an SSDI check. In October, they were under SSDI, and so that person received a check, not under SSDI, under SGA of 1350. And then in November and December, they were over SGA. And as you can see in December, there were by 100 and something. So the person could have easily used an IRWI if they would have had one, or a subsidy, and then they would have received a benefit. And then in the year of 2023, the SGA was 1470. So they were over by $23. And so because they were over $23, they did not receive an SSDI. Again, if the person would have had, in this scenario, would have had an IRWI or a special condition or subsidy, they could have easily received their SSDI benefit. Now in 2024, if this person is still working and still earning $1493, this person would be receiving a benefit now because the SGA is 1550. Okay, so this person's EPE, which we like to call phase 2 in our office, would end in June of 2025. So in this scenario, if the person continues to work, and if the person is over SGA for the year of 2025, Social Security can determine that their benefit would be terminated due to earnings, not due to disability, but due to earnings. And there is ways to come back to the benefit. So one of the ways they can come back is if their benefit was terminated due to earnings, if the person still has the same disability, and if the person's hours have decreased or have stopped working, the person can return to work, return to the benefit under something called expedited reinstatement. And they have 5 years from the time the benefit was terminated to come back under expedited reinstatement. So it's a much easier process, it's much faster, and the person does not have to provide as much information as they did when they initially applied for, because they have already been receiving the benefit. Okay, now I'm going to provide to you a second scenario. Now in this scenario, the person used 5 months of trial work period in 2019. and the person decided that they wanted to go back to work. And they started working, I want to say late December of 2023. And their goal was to earn $17.38 a month. So in this scenario, it would be likely that Social Security would terminate and determine cessation and provide 2 months of grace period again after that 9 month. So as you can see, we talked about 60-month rolling period. So this person initiated their trial work period in February of 2019. They only used 5 and then did not work. So those 5 months are still there, and then they continued on. The person started working in 2023. They were under substantial gainful activity for 2023, and in 2023, trial work period, they were under trial work period in 2023. If the person earned 1,050 or more, then Social Security would initiate a trial work period. And in December, they did that. So the person had trial work period in December, but not November. And then 2024, they continue working and earning 1738. So they completed their trial work period month in March of 2024. Now, because of their earnings, it is likely that Social Security determines cessation. So they started APE, but at the same time they started APE, Social Security would still give them a payment in April, May, and June. So as of this month, that person would not receive an SSDI benefit. Their benefit would pause because they are over substantial gainful activity. Now, what happens during the time of EPE? Again, if this person at any time goes under 1550 for this year, that person can continue to receive their SSDI benefit. Next year, we don't know the amounts that it would be increased to. We usually learn about it in October or November. So we would not be able to say whether or not that person would be eligible for SSDI benefit at this point in next year to receive an SSDI benefit. Okay, so everyone's situation is different. If you have any clients who, or you're a client yourself and you want to know what your benefits might look like, reach out to us. We will be glad to help you understand your benefits and how that might look like. Now with WIPA, we don't only focus on SSDI and SSDI, but the person does have to be on SSI and SSDI to receive our services. But we also like to inform them on what's going to happen to Medi-Cal, what would happen to Medicare, what would happen to CalFresh if they're receiving CalFresh, and what would happen to their housing assistance if they are receiving housing assistance. So feel free to reach out to our WIPA program. The person, again, can call through the Ticket to Work helpline, or you can feel free to email me anytime or give me a call and we can get started. If anybody has any questions, I'm willing to take questions now.